Greetings and hello. I am James Robert Lay, and I'd like to welcome you to a follow-up conversation that began a couple of weeks ago with the New Starts Now series from Nymbus, hosted by the Financial Brand. I am joined today with Jeffery Kendall, CEO of Nymbus, and it is always good to spend time together with you, Jeffery.
Always love our conversations, James Robert. So this is fun. Appreciate it.
They are a lot of fun, and I'm really looking forward to this follow-up because in our first fireside chat discussion, we got a lot of great questions. I think we had over 500 people registered to attend that event. And one of the questions that I want to get some additional clarity on for those that are watching and listening to this is a follow-up. What is niche banking? Because we can all define this a little bit differently, but this is a big area of focus for you. How would you define niche banking from your worldview and the work you're doing over at Nymbus?
Sure. So I think it's easiest to define how we think about niche banking in kind of two lenses. One is niche is really about just looking at customer segmentation differently than traditional banks have done that. And when you look at the market historically, rewind pre 5 years ago, there were really a bank either looked at a market segment based on geography or based on a limited set of products, and that was very it. But it almost always came down to these very basic segment models, like I live in Colorado, or I'm of a certain age group. And niche banking encourages people to act like marketers do in other brands and other industries, and really, really get as close to the individual and really a segment of one as you possibly can and still be efficient. So that's how we think about niche banking. It's either a very, very specialized market segment or a very, very specialized product set that goes to a specialized market segment as well.
Yeah. So, and I like this idea of focus. And as a follow up question to that, one of the attendees had asked, how can you make money from a niche? Because I think that's what we're all thinking. Like, this sounds great in theory, but how do we actually make money from a niche? Because as this person wrote in, they're usually smaller in number, they're very particular, and they're maybe more expensive to create products for them. Is that true, or where might there once again be a perception gap into some of this thinking? And I think that's what it is. It's more perception shapes reality here.
I think that's true. I think for us, when we look at number one, whenever we talk about niches, it always starts with data, right? You have to be very data driven. You can't sort of say, well, we're going to go focus on this particular segment of the market and then go through a bunch of work and quickly find out that there's only 100,000 of those people in the US. That sort of segmentation might not ever create a profitable industry. But anytime where you see hundreds of thousands, if not millions, of group of people that you could put into a segment, that can bear the fruit of a profitable niche. And that can be, what we've seen is sort of the minimum to become profitable as a niche digital bank is roughly 10,000 consumers. Fewer if you're talking about small business, corporate banking, those sorts of things, of course, because the profitability is higher on those types of customers. But you really only need to find a segment that you think that you could credibly go acquire 10,000 or more customers. And sometimes it could be millions of customers. If you were focused on creating a bank that's focused around video gamers, that's hundreds of millions of people in the world, not just 100,000. So you can see how you could quickly get to a niche that had scale.
And I'm glad you mentioned that number of 10,000 because this was a question that a couple of those that attended had as a follow up. What would it take for a financial brand to gain a customer list to get to 10,000? And someone else had asked, could you give some examples of hooks to get this first 10,000? Because once you get that 10,000, that's like the first objective point. And I think sometimes there might be incorrect expectations. For example, someone thinks that they need to have 100,000 or
Right.
to make that. But you're saying no, we can pare that down to 10,000. What are those first steps to get to that first 10,000?
Sure. Well, I think number one is if people need proof points of sort of the size of banks and institutions, there are hundreds, if not thousands, of banks and credit unions out there that only have 10,000 members that operate in a traditional model, right? And
Mm.
they're operating under what arguably be a much higher cost of operation than running a digital bank because there's still running in-person operations, they're running branches, they're running, very expensive ATM fleets and things like that. So it's still, you can still do it. In fact, you can become even, more profitable more quickly if you're doing it in an outsourced and digital way. So that's sort of how we think about it, getting to there. But in terms of acquisition, it really depends on the niche, as you can imagine, in terms of, what's the best route to market.
Right.
What we've seen is that we can actually get our cost of acquisition down into the $70 per customer, which sort of best in class for a regular or a traditional bank or credit union. It's probably closer to 240 to 250 per person on a similar
we
lifetime value.
Yeah, and we've seen as high as 300 to 500 even. And if you're going over to the commercial side, you're talking sometimes 2 to 3, sometimes upwards of 5,000 for a commercial client. So that's a great benchmark right there from the work that you're doing and seeing. Very
Yeah,
helpful.
and again, that comes back to the relativity of what the customer lifetime value is of those customers too. So we kind of use a benchmark of somewhere between $4,200 and $4,800 per customer in terms of LTV. Over a 4 or 5 year period is what you kind of look at those numbers for. So given those economics, you can become very profitable in terms of just getting a small amount. And part of it is the reason that these niche banks can be profitable faster is that we've embedded scale in the pricing model and in the ability to launch these things. So the reason it's surprising to most people and sounds, I'll say, almost too good to be true, is because in the current environment where people are having to operate banks, there's no way you could be, it'd be very tough to be profitable with those lower numbers. And that's why they look for that scale. So bringing a digital bank and bringing the inherent scale as a service is what we call it. We can do that.
And someone wrote in also, they said that they really are appreciating the perspective. They see the opportunities of niche themselves, but they also noted that many have lost their way to use just geography only for growth. What would your advice be for a financial brand looking and really needing to get buy-in from senior leadership team, boards of directors who might not see the same path that you do or others? How can you help give them some, first and foremost, I think, clarity, and second, just some hope when it comes to the future here?
Sure. So one of the things that we did, I'll give you some examples of niches and why it's so important to go back to the data, right? So if anybody was saying, how do we start this sort of, exercise and looking at where do we go and how do we make this profitable? It really comes down to understanding what segments already exist and what niches. But just some interesting data from a report that we pulled for a customer recently. We looked at a very specific market segment that was that they had in the geography that they currently think about, which had 17.6 million users in it. Okay. Out of those 17.6 million, 11 million were gig economy workers. 5.4 million identified as Black or African American. 8.2 million of those were millennials. 400,000 worked in logistics and transportation. 750,000 worked in construction. And then the one that I thought was interesting is 1.8 million of those were veterans. And so any of those ones that I just talked about could be a niche segment that you could go after. Right. But all you need to do is look at the data and go, what are the characteristics of this market segmentation that we have? And then how do we identify ones that are pockets that are big enough to generate that niche? But then also we could create meaningful financial offers around, because not all niches are created equal. We always say that in terms of what we do here at Nymbus. Some of them, like if you're talking about going after video gamers, that could be a very, very profitable and huge niche segment. Or you could be going after, teachers in a specific market segment. Both are niches and great niches to talk about and address, but they're just different in terms of size, scale, and capability. So you need to take that into consideration too, which is what is the ultimate objective and how big are you trying to grow to fit that in?
Yeah, and I think that's a great follow-up, because someone else had asked, what would be the recommended MVP or the minimum viable product that should be offered to a niche to explore around? So, and I think the path is you offer an MVP, you get some testing, you get some data, you get some feedback, and then you can continue to expand and build on the platform to build on the plot the product. But what would the MVP be that you would recommend?
Sure. And we start a little bit differently because we have almost a template approach to creating a what are the basic set of products that need to be offered to a niche market. And the templates that we use and the sort of four template models or whatever you want to call them that we use is one is a consumer lightweight deposit account. So I kind of think about if a bank strategy is to go acquire, deposits in a low cost rate, there's one set of products. And we have, that basically is a demand account, maybe a credit card, and that's about all the, savings accounts and basic demand deposit accounts. That would be very similar to what like a Chime would offer, right? Which has been the big
Right.
play there. Rapid customer acquisition and grow and scale the deposits and cost of deposits. Then the second one is a more robust consumer experience, like what you and I would expect out of our relationship with someone like a Chase or a Bank of America. It's going to have mortgage lending. It's going to have personal and unsecured loans. It's going to have different types of maybe investment accounts and things like that. So that's a more robust, but that's when you're trying to have sort of a long-term lifetime relationship with someone where you want a more holistic offer to go in there. And then the other two is really a bank focused on small businesses because they have very particular needs that we think about that as one set of minimal viable components. And then the final is commercial, corporate, or treasury type banking, which have them. So each of those have their different needs. And that's why we take a very templatized approach to say, if you're sort of dialing in on a niche that is one of those segments, here are the things that you want to start out with. And that makes it easier to kind of digest and consume. But beyond the basic banking products, you just got to make sure that you get that hook right. That's the most important piece of the equation once you have it.
Yes, and it's getting that hook right that you can come back to the data, you can come back to the research. More so, I would even say the psychographic data of what makes a person tick. It's not only the demographic data, but it's getting into what we would call the thick data, and even asking, getting questions. So it's a framework that we teach. Go all in. You just simply ask, you listen, and you learn. And people will tell you what their likes, their dislikes are, what their questions and concerns, what their hopes and dreams are. And you build not only just the product, but the positioning around that. One final question from a viewer that had asked, with Nymbus, are you only available to an existing financial brand, or is it a non-financial brand with a large consumer base? If it's the latter, do you place brands with banks? What does that model look like right there?
Yeah, no, that's a great question. So, we have a large chunk of our business that is building off of growth opportunities with traditional banks and credit unions. Then we have large consumer brands who are looking to monetize that relationship, as you mentioned, with through, extended financial services products. It's, building off of the airline miles credit card that they started with and now getting more deep in terms of the products they can offer. And then finally, de novos and challenger banks and digital banks who come with an idea that they want to start a bank, but they don't have a charter. We will help match them up with one of our customers who is getting into that space. And that's a big emerging space for us, which is helping banks and credit unions think about what they need from a technology, people, and process perspective to offer banking as a service to non-bank brands, fintechs, and things of the like. So that's an area that we're deeply involved in right now, which is to help banks and credit unions understand how to monetize their charters by participating with fintechs versus fearing them. It's like there's an opportunity out there to actually to grow with them.
Absolutely. I mean, there's a whole sense of abundance and opportunities that we can come together from looking at collaboration and not just with competition. On a final note, and I appreciate the additional perspective shared from our initial fireside chat conversation. If someone wants to continue this dialogue and discussion with you directly, what is the best way for them to just reach out and say hello?
Yeah, absolutely. Anytime. LinkedIn is always open for me. That's an easy way to connect with me, or email me directly. My email is jkendall@nymbus.com. And I love hearing directly from people who are interested in what we're doing. So would be thrilled to have that conversation with anyone having more questions.
And for those that are watching as well, I highly recommend our podcast conversation that Jeffrey, you and I had a while back. We will also include that as a follow-up to this dialogue, to this discussion here today. As always, and until next time, be well, do good, and make your bed. Always good seeing you, Jeffrey.